Hi guys, welcome to today's video in which I'm going to explain a ready-to-use entry strategy which I personally use on a daily basis. If you're interested in more of these kind of videos, make sure to leave a thumbs up and subscribe to the channel. So without further ado, let's dive straight in. So when I analyze my currency pairs, what is the first thing I do? Well, the first thing I want to do is mark out my higher time frame trend, because once I know what the higher time frame trend is, I can translate that down back to the lower time frame. So the first thing you want to do is identify, okay, are we situated in an uptrend or in a downtrend? So if you're in an uptrend, you know that we're going to have higher highs and higher lows. And if you're situated in a downtrend, you know that you're going to have lower lows and lower highs. So as we can see over here, if we look at the current price action on the 4 hour, what are we currently doing? Well, we can then easily see, okay, we are situated in an uptrend and we're going from that uptrend over into a downtrend. If we draw on this trend line over here by connecting the higher lows, because as we can see, we have a low, higher low, and then we have a high and a higher high. So you might wonder, okay, well, what next? Well, I was personally waiting for a new higher high to be formed and a continuation of the trend. But as we can see, this high over here failed to become a new higher high. So the uptrend failed to continue. And then what did we see? We broke the trend by breaking this low over here. So we're currently going from the uptrend over into a downtrend. So once we know that the higher time frame is going into a downtrend, we can then look at the lower time frame for possible entries. So if we then go to the 1 hour time frame, what can we then see? Well, we can see that we were situated within this ascending channel over here. So moving towards the upside in this ascending channel. However, what happened next, as we can see on the 1 hour time frame, the trend failed to continue because resistance was met over here on previous support. So previous support became resistance over here, as was also visible on the 4 hour time frame. And as we can then see, the trend went from up to down. So we're currently within this 1 hour downtrend. So what do we want to do next? Well, we want to mark out and connect the lower highs and the lower lows. So as we can see over here, we even broke out of this descending channel. So I'm really bearish on this pair at the moment. If we then continue, and we can see, okay, support was formed over here. So what do we want to see next? Well, we want to see the trend continue towards the downside, right? And where do you want to enter these positions? You want to enter on the pullbacks, because the pullbacks will always provide you with the best risk to reward. So in this situation, if we look at what price is doing over here, we can see that once you enter on the pullback over here, you're going to have the optimal entry because you're going to be able to ride the entire wave back towards the downside. So in this situation, what do we want to see and where do we want to enter? We want to enter at the next resistance area to be able to trade the trend further back towards the downside, right? So in this instance, what do we have to do? Well, we have to mark out the previous support level, which will most likely act as the next resistance level. So in this case, this previous area of support should now and will most likely act as an area of resistance. So what is the best thing to do in my opinion? Always mark out the lowest point in price of the area of previous support or resistance, because that area is most likely going to be hit and is going to give you an optimal entry. So looking at what price is doing at the moment, all we have to do now is just wait for price to retrace back up towards that previous low, which should now act as resistance. Then wait for bearish confirmation and just enter. In this case, we know that the higher time frame is in a downtrend, the 1 hour time frame is in a downtrend, and we're going to be trading with the trend because the trend, ladies and gentlemen, is our friend. And where is the optimal entry point? The optimal entry point is at previous support, which should now act as resistance. So in this instance, what can we then see? We get our bearish confirmation by this bearish engulfing candle, place the order, set your stop loss just a little bit above structure, and target the next area where you expect price to move towards. So if the trend towards the downside were to continue, we can then say, okay, this is the next area of where I expect price to find support. And once again, we mark out the highest point in price of that previous resistance area because we expect that price point to at least get hit. So in this instance, we're just going to press play, see price come back towards that line, towards that lowest point of previous support, which is now resistance, and just let price ride back towards the downside. And boom. What can we then see? Target smashed. So just in a nutshell, to explain how I execute my trades, what you want to do first is look, what is the higher time frame trend? Are we in an uptrend or are we in a downtrend? Are we going from an uptrend into a downtrend, or are we going from a downtrend into an uptrend? Then translate that higher time frame trend onto the lower time frame. Then all you need to do is mark out those key points of price where you expect resistance or support to be formed, to then enter on the pullback that price is going to make. So thank you all for watching. If you have any questions whatsoever regarding this episode, make sure to leave your questions down below in the comment section. If you're interested in learning how I utilize this strategy on a daily basis, make sure to check out the link in the bio down below. Don't forget to like and subscribe, and I can't wait to see you in tomorrow's Daily Outlook. Thanks guys.